Hi there, welcome to the market update on the 19th of March. All about the Fed this week, of course. I'm not going to crap on about their rate rise. You've read 50 articles about that already, but I want to focus on the 10 years. They are starting to move. They're selling off quite rapidly and have reached my target of 2.2%. So let's have a look at that chart, and then we'll check out gold and oil and stocks just to give you a few key levels to watch out for over the next few weeks. So looking at the US 10-year bonds, this is a chart, a monthly chart, going back 10 years of bond yield. So when you see that going up, that is the bond yield rising and the price of the bonds falling. You can see there, it's gone from 1% up to 2.2%. And the point of control you can see there, if you have been watching these videos, basically we're just looking at the old range from 2012 to 2014 that got created there. And pretty much all of the price action since has been oscillating around that range. And this is that widening distribution that I often talk about, which is prices having false breaks of the edge of the range and constantly revisiting the midpoint, which shakes out traders, causes lots of losses for people who don't understand how these sort of ranges and distributions develop. So it's reached the target that I've given you a while ago, 2.2%. And the thing I want to point out this week is with that sell-off really accelerating, the question is, will 2.2% hold it for now? And if it doesn't, there's not much resistance in yield once it sort of heads through there. I really could see it just shooting higher, up towards 2.6, 2.8%. So that is going to be the interesting thing to watch. US dollar starting to look weak. So I guess the question is, are offshore holders possibly selling bonds, selling US dollars? That will come out, I guess, in time. But we're sort of getting to that point. Do these offshore investors, as the yield curve really starts to kick higher, are they starting to sell out of those US long end bonds, the 10 years, etc.? And it does the inflation worry with it up around, 7-8% at the moment. If you're getting 2% yield on your 10-year bonds, you're not going to be too happy about that if inflation stays very elevated. So the way that these 10-year bonds move is going to really decide whether stocks can hold in there or whether they do take fright going forward. So now that it has reached that point of control, really it is just watching to see whether those bonds are going to just ratchet higher up towards 3%. And yeah, you've got to be careful if we do start seeing that. So I do just want to quickly look at the high yield bonds. These are the iShares High Yield Corporate Bond Index going back a decade. And you can probably notice it really is in a bit of a downtrend, isn't it? And it has been. And it's sort of sticking to that script of that very long-term downtrend. But you just note that just in the last few months, from up around $88, and it was sitting there for about a year, it has tipped over and the long-term trend has turned down. And that selling really was accelerating going into the Fed rate rise. Now we've seen a bounce. So those junk bonds have bounced in price, and it'll be interesting to see how they go over the next few weeks. Well, there's a bit of a line in the sand there at $80 on those HYG. If the selling returns and it heads below there, you are looking at a phase that could look something like this, the 2020 move. It really has rolled over. And when those junk bonds do roll over, and you've got to remember they've been trading at a very low yield, really, compared to government bonds, probably the lowest spread for years and years and years. So when they kick higher, when those spreads kick higher and the corporate bonds start selling off, it really can be quite sharp, the selling. And that can feed into selling in stocks as well. So keeping an eye on those sort of things is important going forward. And just moving on to the S&P 500, we are seeing a bit of a bounce from oversold levels. Is that the beginning of the next leg higher? Who knows? I'm going to leave it to the charts to tell me. And if you see here on the weekly chart, the 20-week simple heading down, 10-week exponentials crossed beneath. So the weekly trend for me is heading lower. And you'll see in the past here, once it is pointing down, it could turn into anything. You don't know really what's coming. And it's not really until that trend turns back up that you can be confident that, that selling pressure might be done with and we might be heading back to the upside. So from that point of view, just wanting to point out that there's no sign that this weekly trend is turning up yet. So all we're seeing really is the first signs, and that buying pressure can easily go and meet very strong selling pressure up around that 20-week simple moving average, for example. And then it can tip over again. And especially below that 4,100 level, the low of the whole correction, that would be the one thing I'd sort of take away really today is back under there. It probably will cascade to the downside for a bit. And as long as it holds now, though, I'm very prepared that, this could be it for the correction for now. And we could see, attempted rally. There'll be selling pressure up there, but, we could be in for just some work done for a while. So really the line in the sand around 4,100, and I could see a bit of a bear market rally happening here for a while. So you may see a bit more upside, but be aware that there's probably a lot of overhead resistance, I guess, would be the thing I'd want you to know. So that's really it for this week. Not too much to say about the markets right now. I think we've got to observe what happens over this next few weeks, whether those bonds keep selling off, whether stocks can actually keep rallying after the Fed has raised rates. I'm not sure they're going to. So anyway, if you would like to receive these videos, just sign up for Money Morning. It's a free newsletter to sign up to. Gives you updates on various things happening in the financial world. Trying to help you guys make money and sense out of what's going on in the markets. So definitely sign up for that if you haven't already. And I will come back with more next week.